Hello, hey, hey. Can you hear you? Okay. Let this Bill coming in. Let's just jump into what we were doing. Participants file. Let me see. Um,
Hey, Bo.
I'm playing around on this phone here. How do I do that? Let's get back to 1, 2, 3, 4. Okay, it's 4 of us in here. Total of 5 with me. I think Chuck's coming on. Maybe not.
So what's the shirt you got on?
What's this shirt?
Yeah.
Oh, the greatest team ever to play football.
Oh, is it the Dolphins? I could only see the top. Oh, okay. I like that. You don't never buy your sister nothing.
Oh, you want some Dolphins Italian?
Yeah, you know my husband don't buy it.
Okay, so for y'all who didn't tune in last week, we introduced the group to another, I would say, another cash conduit, another way of making money, other than the naked puts that we originally introduced you guys to. Last week we introduced, and we'll go back over it this week because I'm recording, which I didn't do, and I probably would have went over it anyway, because it takes some time. It takes some time to hear it, and then we'll begin to exercise it and play around with it. I sent 2 calls. Was it calls or puts? I sent 2 calls out yesterday. And this is just this cash conduit that I'm calling it is buying calls and puts.
Buying calls and puts.
It's buying calls and buying puts. So the key word is buying, 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 buying. We're not selling calls, we're not selling puts in this new introduction that I'm talking about. Mm-hmm. So kind of take the word sell out of your vocabulary. We're buying calls, we're buying puts. The only time we talk about selling them is when we have taken our profit and we want to take our profit and we want to get out of it. So it's the traditional, let me sell this to take my profits. Let me end this contract. So this is buying sells, buying calls, and it's buying puts. Now, it's the same option chain that you're familiar with. It's the same expirations that you normally drop down to figure out, do I want to do this for 1 week, 2 weeks? They do expire on the Friday that you determine, just like what we initially introduced you to naked calls and naked puts. So I just kind of want to talk through the groundwork again, because the tools are the same. You're still in the option chain. You're still on TD Ameritrade. The calls, if I say buy a call for a June 18th expiration, then the 18th is this Friday. So you would go to the option chain and you would open up the option chain expiration, and we'll get to it. And then you would look on that particular, you'd go down and you'd look for the strike point that I had given you or the directions. And then you would buy a call because you're on the call side. And the way you buy it is you would touch not the bid, but the ask. Okay. Because you're buying it. Okay. Now, consequently, if I said buy a put, and I said buy a put that's going to expire July 2nd, again, you would go to ABC stock, you would open up the expiration chain, and you would find July 2nd, just like you've been doing. And then you would go and you would open up the July 2nd expiration, and then you would drop down to whatever direction strike that I had given you. And this time, since I said buy a put, guess what side of the option chain you would be on?
On the put side.
You'd be on the put side. Hang on, who is this? Somebody saying. It's Chuck. He said he can't get in. Did y'all have a problem getting in?
Nope, none.
Anybody have a problem? He said, did I change
No.
something? I said, no, I didn't change nothing. So if I said by a July 2nd put,
Mhm.
you would open up to July 2nd expiration. You would come down to whatever strike I said on ABC stock. If I said buy 35, it's asking for a passcode.
Oh, yeah, it always does. It's
Yeah, 5, 6, 7, 8, 9.
90. 5, 6, 7, 8, 9, 0.
Okay, 5, 6, 7, 8, 9, 0.
Yeah.
Let me just tell you.
Mhm.
Hang on, yeah.
Mhm.
Chuck, yeah, I remember that. I don't know why. Maybe Zoom has made everybody start doing that. Sometimes I remember sometimes you didn't have to do that if you just.
Sometimes I don't have to, it'll go straight in.
Oh,
If they
really?
don't- Yeah,
Uh-oh.
once they enforced it. Yeah, they used to let you log into Zoom without passcodes, but during the beginning of COVID, they started enforcing it.
Oh,
That's Chuck. He talking about, man, it's been a minute. I'm like, yeah.
mine always,
Okay.
it always asks me for it.
Yeah.
So again, we're talking about another conduit. I think Bernice just joined us. This is another cash generating conduit, other than just buying. I mean, other than the naked puts that we initially been doing. I introduced last week this other way to make money, so to speak, and this is just simply buying calls and buying puts. And I'm just talking through what I'm gonna show. That way, you'll be seeing it the second time instead of hearing. And it's very if you know what you're doing, it can be very profitable. Who is Marcus Lucas?
Mhm.
Anyway, that's somebody else coming in. So in that second example, I was saying buy a put in this news direction, and you would buy a put by going on the put side, and in the example, opening up to July expiration, and
You
then you
still
would
go under the ask.
you would go to the ask. It's, again, buy is ask. So you would identify the strike point, and then you would go over to the ask, and that's where you would buy. Okay, and it will come up as such, and then again, you get as many contracts as you can afford, and then again, you all know how, from there, it's going to ask you 2 times if that's what you want to do, and then obviously you want to make sure it gets filled. Okay, so that's all it is: buying calls and buying puts. It's another way to generate cash, and I wanted to talk you through it, like I said, and I'll show you as well. I'm on my mobile phone because this is where I do most of the work, and I kind of wanted to be able to navigate around without, kind of jumbling it up. But I got a feeling that I'm gonna still be jumbling it up because I don't do Zoom a lot on my phone. But anyway, we're gonna give it a shot. So welcome everybody. Welcome. I am recording. I hope that's cool with everybody, because you can go back and take a look at this. So I may be moving kind of at a steady pace, but always remember, you can go back and view what we're doing here. So I'm gonna share my screen. Let me see here now. What do I share? Share. Let me just try this. Google Drive. Web URL. Okay, let's do this. Hang on. Oh, screen. Recording, podcast.
What on you get?
There you go, Gerald.
Okay. Yeah, I see it. I see it. Okay, so let's do this.
Touch where you want to go.
Right. Yeah, I'm on it now, but I want to see what I want to do first. Okay, let's go to an example here. Okay, I did here's one. Here's one. I did this one today, guys. You guys can see this, correct?
Can-
It's coming
It's
up.
a little.
Coming up.
Okay, y'all see that?
Yep.
The Ford. Okay, this is a what is it? It's a put. If you can see, this is Ford. You see the big writing right here in kind of top left. It says F2. So this is a put. Now understand, if it's a put, I'm basically betting that the stock is selling at 1502. I'm saying that stock is going to fall. I'm betting that it's a put. I'm betting that the stock is going to come down. Okay. You need to know that and Ford has been on a downward trend. So the service that I use sent this out today, and I call it a play. The service that I use sent out this play, and they said by the Ford July 2nd. So that's what you're looking at, F2 July. That's Ford. The 2nd of July is the expiration, 21. She said by the 15 strike put, and you see it's we deal in the hundreds, and it's the weekly. Okay, so if we go in here and show F details, come in here and let's look at the option chain. So what I did was, you see, I opened up the option chain. You can see those pennants, that green and red pennant. That's symbolizing that I have a position for that July expiration, and it's 16 days to trade in parentheses. So remember now, this is a put. So I have to go on the correct side, which is the right side of the option chain. And you see me scrolling down, and now you see those pennants as those are the little flags, as we call them. Those, you always know you got a position. And a lot of times it's a good practice too, guys, when you come in on Monday or Tuesday and you're looking at, you're like, okay, do I have a position, or did that position come back to me? It's a good practice to come up here. And what I do is I open up every single one of these like this. And I'd be like, okay, yeah, I thought I had a position. Yeah, I got a July 2nd position. So always get in the habit of, if you're not reading it on your positions, or you say, I need more confirmation, don't be afraid to come in here and open up every expiration and look for any kind of colorful pennant or flag. And then that'll let you know, yeah, I'm still on the board, or I'm not. Let me put them on the call side, or let me get back on the put side. That's a little side note, but back to what I was saying. Buying this put. So basically, I came in and I'm buying a put because of the service that told me this morning. They said buy the 15 strike. And what I did was I came over to the ask on the put side. You see 51 cent right there, right? I touched it and I put in 6 contracts. Hit the review, and it's telling me the cost of my trade. This will cost me. Now this comes out of my pocket, okay? It's not like the original naked and puts that we originally been teaching you all for the last 4 months or however long. Okay, so change your paradigm here. What we're talking about now is literally, I have to have this money to pay. This is what it costs for me to purchase six contracts of Ford. And that's basically 600, because that part doesn't change. It's still increments anytime we deal with this option chain of 100. Okay, so everybody with me. I got somebody in the waiting room here. How do I get back to do that? Uh-oh. Hang on. Trying to let somebody in. Chuck, are you able to let somebody in?
No, because you were in. Let me see if I can't though. Let me see.
That was Uncle E.
I'm trying. Hold on.
Stop sharing. There you go. Just stop sharing. Then hit admit.
Okay, stop sharing.
Now go back to your participants and admit.
Are you kidding? I gotta do that every time? Okay, I see. All right, so now let me get. Welcome, welcome, welcome. All right, let me get back to share. Dang, man, this is crazy. All right. Let's see if I can share this. Nope. Okay, here we go. I think here we go. Share screen. Man, they make you do a lot.
Oh, it's not hard, man. Get used to it.
Okay, y'all with me?
And then you can use your pen, man. Get your pen out.
I ain't did this on this phone in a minute. I only did it one other time.
Get your pen out, and then you touch the screen. It automatically scrolls over to your right, and you can highlight and mark with it.
Okay, am I sharing though?
Yep.
Yes.
Okay, so we back to the order editor. Okay, so in this example, I'm buying 6 because they were so cheap. Okay, so
How much were they, Gerald? How much were they each?
51 cents at the 15 strike. It's 51 cents, which is $51 because we know we're dealing with $100, 100 increments. Okay. Now, again, I'm on the put side, so I'm saying that, but basically what I'm saying is by July 2nd, up here, expiration, I'm saying that the Ford will be trading at or lower than the 15 strike. But here's the caveat, guys. You make money, and when I got into this earlier, this 15 was not in the money. Okay, and it's still not in the money, but it's at the money. It wasn't even this close. So what I'm saying is, all you need to do when you buying calls and puts, which is what I'm showing you guys, all you need to have is the underlying stock. The stock needs to move in your direction. That's when you begin to accumulate money. Okay? It just needs to move in your direction for you to make money. So if it moves in my direction, I will make money. It doesn't have to all the way overtake the 15 and go down to 14.5. I can get out, whenever I am happy with the profits that I've obtained. Okay. So you are the CEO of your portfolio, in other words. So let's take a look at this. We're going to stay in here for a minute. Let's go back to the 51, to the order editor. I got in here 6. Hit the review. Everything like we're familiar with, none of that changes. We just know that this cost to trade is not a premium, guys. It's not a premium. This is what it costs for me to buy 6 of these. So I want to be very, very clear. And then I got one more chance to hit the review. And then we get the plain English over here. It says in the green strip, I'm buying 6 Ford. This is the 100 weeklies. The expiration is the 2nd of July, 2021. I did the 15. It's a put. Again, I'm betting that it's going to come towards me. And as it moves towards me, I make money. I did it at the 51. It cost me 51 cents. And it's a limit order. The rest of this is the same as we've seen it, but maybe a little bit different. I'm not going to press send order, but
Hey, Gerald, before you go back though, I want them to understand the very important where it says break even stock price. You should
Right.
make note of that.
Be mindful. Yep.
That's your
Because
break even. I mean, and that's where you're gonna be, like when me and Gerald are in there, we put a limit on it. A lot of times that's our limit. And when it hits 1449 to get out of that stock. Now you can
Correct.
stay in it longer if you want to, if you decide that, but most times what we do is put the limit on there. That's when we want to get out.
Correct. And you've heard me say the service that I'm using. I'll talk a little bit more about it. The service that I'm using, I use her break even because for some reason she's been pretty spot on, and I don't know if she's got some algorithm or something that she's using, but she knows what strike that she wants to send out to, you know, the patrons. And then she gives us the break even. So I use her break even. Many times it's maybe a couple of pennies off or maybe 20 cents different from my break even. But I want you all to understand that even though those words are pretty self-explanatory, break even, that you have made money when that stock moves and actually hits your break even. You have accumulated many times way more than just a break even. And so that's why I'm emphasizing when the stock moves in your proper direction, you make money. And then when it finally hits what we're seeing here, this break even, as we're calling it, you have made not only your money back, but you've made money on top of that because it's done. Huh?
So how much money did you make on this?
Well, I just
Oh, you just did it today. Oh, okay.
And remember, I'm
Okay.
showing you one that I did. I bought this
okay.
put today, and I put 6 contracts on it, and I'm gonna show you. I'll just take you guys through what I do.
Okay.
So everything that I do, I write down.
Mhm.
Okay, this is why I'm coming on here. Okay, so here's my scratch pad. You see right at the very bottom, I bought 6 forward puts, 616 for they expire 7/2. I bought them at 56 cents. That total was 336 for me when I did it earlier today. The break even, she said, put in, get out at 1450. So that's the services. That's her break even. Okay, so I just want to take you through my process. Before we get out of here, you see, I bought 3 riots. These were calls. The C represents calls. So with 3 of the riots, I did this on the 15th, 6/15. Okay, the riot, a call is betting that the price is going to go up. We can look at that chart before we out of here. And then look at the break even for the riot. They were at $40.78, she said. So what did I do for that break even? We'll go over that maybe tonight or maybe later. I put in what they call a sell limit. A sell limit is just going into the software or TD Ameritrade, and you just telling the computer, hey, when it reaches, in this case, with these 3 riot calls that I bought, when it reaches to the $40.78, let me take my premiums and stop me out of this trade. I want out. So there's a way to do that so that, you know, if the market opens up and you put butter on your toast, and all of a sudden it's like, oh, it went up to, in this case, that $40.78, but then it dropped back down to like, 34. You're like, oh man, it hit my point. It hit my break even, and I'm still in this trade. I hope it go back up. We've been on that side of the fence. You can see another one that I bought, 3 MARA, that's marathons. There's some sentiment around that, and the riot is pretty much piggybacking on the marathon. Marathon is going to be added to the Russell 2000, and the service that I'm using, she sent a call. She said, get in if y'all want to. It's your choice. You can get in at a call, get a call and let the break even be 34.65. And then here are some that I've been in, and you can see profit 200. This is just so far. Now listen, here's the deal. If you in this, you may lose, okay? Obviously, you only want to do what you can make money with. I mean, what you okay with losing. And that's just part of it. Everyone don't hit. We know the stock market don't let us be great all the time, right? You know what I'm saying? So it's just skin in the game, man. And as you get in this, you get smarter. You begin to, I'm doing my own technical analysis. Yes, she leads me, but I get in these, say for instance, it's a call. I want to give you a little quick strategy before we move on. If it's a call, we're betting that the price is going to go up, right? So the minute she sends this out to me, I don't just jump in it. I look at it, I do my technical analysis. And so since it's a call, I'll wait for it to dip. I want to buy the dip because it's going to be cheaper if I can buy it when it's going away. So I'll let it kind of bottom out. And then I will go to the option chain and do what I just showed you all. I'll buy my 6 contracts or whatever. Now, that's because I have confidence in the stock. Let's go back to the one right here at the very bottom. This Ford that I got in today, when she sent it over, I just waited, man. I just looked at it. I tried to find some sentiment on Ford. What's going on? I'm gonna show you all what I did also. While I'm talking about it, let's just show you. We'll come back to Ford. Go. We'll come back to Ford. Let's go. So I just want to show y'all the strategy real quick. And while I'm talking about what are you looking for? I want the chart, G. So this is what Chuck and I was talking about. When I say pull up a day chart, you see, here's all my charts right here. And everybody's familiar with the chart. You see 1 year and a day. Am I still sharing?
Yes.
Mhm.
Okay, so this is a day chart. It could be 3 months and 1 day. It could be 6 months and a day. But the word day tells us that every pip, whether it's green or red, is 8 hours worth of trading. Again, every pip represents 1 day of trading. Okay, so when I say pull up a day chart, basically what we do is you want to zoom out. In other words, you want to look at this stock from the Goodyear blimp. That's what we just did. I hope you understand that. So I don't have a 5-minute chart, a 10-minute chart, 10 days and 5 minutes, or 1 day, 1 minute. I mean, that thing zips up and down. It's like a volleyball tennis match. Those pips go up, they go down, they go up. And it's emotional when you're watching it. You're like, oh man, go up, go up, go up. Oh, it's going down. Well, you're watching it every 5 minutes or every 10 minutes worth of activity. So when I say get up in the Goodyear blimp, and this is what I did with Ford. We're in Ford right now. So I came out to the 1 year and I said, what's so interesting about Ford? Why did the service send us over to do a put? Because they're saying that Ford is coming down, and she said, get in Ford and let the break even. Look at the bottom, 1450. Okay, so let's go back to the chart. All right, so I came here and I got up in the Goodyear blimp and I looked at Ford. So look at the last 1, 2, 3, 4, 5, 6, 7, 8, 9 days. It's 8 red pips and it's 1 little bitty green cross pip. Remember, every pip represents 8 hours of trading, 1 day. So Ford has been trending down. You can even draw an imaginary line from the peak up there at the highest was 1645 right here. What day is that? 6/4. You see in the middle of the screen right here on the crosshairs that I got? That's 6/4. Then on 6/7, it must have been a weekend. So 6/7 must have been Monday or a Monday.
Yeah.
Okay, that was a red day for Ford. 6/8, it was another red day. So when you pull back, you can really kind of take emotion out of the game. You know what I'm saying? And this is just a basic, very, very shallow technical analysis. I don't know how many of y'all was doing this, because when you zoom in and you on those 10-minute charts and 5 days in the last 10 days, but you're on every 5 minutes, you don't really get the full picture. And there's a phrase they say, when in doubt, zoom out. I'm in AMC. I got a really nice position in AMC. But if you look at AMC on a 3-day and a 5-day, 10-minute basis, man, AMC got so much volume and volatility. You'd be like, come on, man, go up, go up, go up. But if you pull back and look at AMC, here we go. If you pull back, like on this day chart that I'm on, AMC is up. I mean, look at that. AMC is up. Now, it did not consolidate it after this really big green pip. That was like a Wednesday and a half ago, 2 Wednesdays. And then, yeah, it's consolidating, but it's up 300%. I mean, look at that graph. It's going up, and it's going to go even higher. But if you get down in there for 3 days and every 20 minutes and every 10 minutes, you'd be like, man, this thing is, I don't know if we winning or losing. Okay. So back to Ford here. Here's what I do. Also what I did, and I'm going to show you guys this. So I looked at the picture from what I call the Goodyear blimp. I put it on a day chart. And I said, man, there's trending down. Ford is definitely trending down. Now, the green line is my 50 SMA. I put it on 50, not 20 on the chart. The red line is the 200, like, we initially taught you all. And again, just to go over the SMA, can anybody help me out? What does the SMA stand for?
Is that the simple moving average?
Correct. How does it work?
It charts basically the average. Isn't that it in a nutshell? Just the average that the stock trades at? Is that how?
That's it. But there is not wrong. It's just incomplete. So basically, it averages the close of every day.
The close every day.
The close. It'll take the close of in this case, that green line, I say 50 days. So it'll take 50 days of closing to and then average all of the close. How do I write on the screen, Chuck? I got my pen.
Click the little arrow that's below the question mark. All right, see right there. Click
Oh, okay.
Right there. All right.
Okay. Oh, I see. Okay, this is high. This is where.
Then click on the pen. Touch
Now
it.
I'm touching it with my.
Okay, so you could probably draw it in. Go ahead and draw.
Yo. Word. Okay. So let me see if I can erase it with this.
Hit the clear.
No, I was trying to erase it with my pen, so you got to go back and hit the clear. Where is it? Oh, clear. Oh, everything clears. Cool. Okay, so yeah, now y'all about to get sick of me. So that's my that's the 50. That's my,
This must be a Samsung.
Yeah, Samsung Note 10 plus. So that's the 50-day average, and basically, yeah, it takes the close of each day of those 50 days, and it average them. Okay, and it does the same thing with the 200. So same thing, close 200, and y'all know you can change it. Many people use 20 and the 200. Since I'm going to monthly trades, I wanted to do the monthly. Well, I wanted to do 50 days. So this, as I can't use that unless I'm. So everybody understands that, and this trend right here. You can see, like I was saying, imaginary. You can see that this is trending down. That's trending down. So it's easy to see why that service sent that to me.
Hey, you clicked off a speaker. Put your phone back on speaker.
I did. What do you mean?
Sound far away.
What I do? Can y'all hear me at all?
Yeah,
Sound
change.
you changed something.
Oh man.
Go back to your phone. Go to the on your screen. You can share your phone. Just go back, hit the square, hit the 3 lines over to the left on the bottom. But you first got to close out of this. No, you got to.
Oh, I got to close out of this.
Yeah, that's what I want you to close. Hit the little arrow going to the left now. See that? There you go. Now hit the 3 lines down at the bottom. It's not there now, but you got to bring them up. Scroll to your phone.
What you talking about?
You got to get to the speaker on your phone or Zoom place, wherever you are.
What's
For
speaker?
whatever reason, you ain't on speaker anymore.
I'm not on. Okay. I'm not on speakerphone.
Man, I don't know what you did.
That's it up top. The blue in that speaker.
Yeah, that's a speaker.
No, that's my silence vibrate.
Oh. It just,
Keep going though. It just sounds like you're really far away now.
yeah.
Let me see. Was it ever good? It was okay.
Yeah.
It was good.
All of a sudden it just changed.
Y'all see that? Y'all see what I'm playing with?
Yep. Keep going though.
Oh, that's fine. Okay. So I was talking about show details. So I was talking about what do I do when this service sends over? One thing I do is I get in the Goodyear blimp and I look at this stock and I say, okay, cool. So they said buy put. It's all it's got to do is come down. See at the very bottom, it's got to come down to the 1450 before I really, get out of this. It's gonna make money all the way down. So it's got to come down to 1450. So what I also do is I come down and I added this little oscillator in the middle. It's another indicator. It's not magic, but I put it down here with the RSI. The RSI is at the very bottom. Okay, you all are familiar with the relative strength index. Is that, I can't forget, is it relative? Yeah.
Relative strength index, correct.
Right. So I put this MACD on there because here's the deal. The more positive signs that you have about a stock moving in a certain direction, the more confident you're going to be about entering it and exiting it. Okay. So what I want to do, I want to show y'all why I'm so bullish on this MACD. And then we'll come back and take a look at let me play this video. I hope you can hear this. Can y'all hear that? I mean, I paused it, but can you hear it?
Yeah, I heard it.
Yeah, I think so.
Okay, I'm gonna start it again.
Okay, if he's talking, we can't hear him talking.
Can y'all hear him talking?
No,
No.
Ah, okay. Okay.
Is that the one you sent me, G?
I don't know what I sent you, man. I don't know. I don't know, but I'll have to put this in the I'll have to put this in the chat. But it's a very good video. This oscillator called the MACD in the middle, and I'll just talk through it real quick. But he talks about, let's just say, the green line. Talks about the green line right here. Obviously, he talks about the gray line, and one of the points that he makes is when, let me just get this lined up. Well, I'm not gonna be able to do it anyway. Okay. He talks about, obviously, these green pips right here, they represent volume, and that's bullish volume, and that means that the stock is it's not trending. I don't want to use the word trending. It's moving in a positive direction. Obviously, the red volume, and it's small volume because the pips aren't that big, means that it's it's bearish volume. Now, here's the point that you really want to look for when you see this cross. Everybody see the green line crossed the gray line. Green means momentum up. Now, this oscillator doesn't tell you what's happening. It just reacts to what's happening. So what he did was he'll show you in the video right here. Let me find a better example. Well, he'll say right here where you find these crosses right here of the green getting back on top, moving up over. He says, just walk that all the way on up to the next. And that's where you see there was a change right there.
Mm-hmm.
They lined up. And then I have to erase, I have to get this off so I can move down here. And down here, where the stuff go?
Joe, I have the video up if you want me to share my screen.
Oh, you have it?
Yeah, I found it.
Okay, well, yeah, go ahead and let me stop my share then. Yeah, it's a good video to see.
Now, is there a certain point in the video you want me, or just start it and you'll tell me when to stop?
Yeah, you want to see it? Go move it forward about three minutes,
Okay.
and yeah, it's something good that we need to see because it's something that y'all might want to add. And again, it's not magic. I mean, the RSI is fine, but we just add more indicators.
What's going on, traders? Welcome back.
Can
to
y'all
another
see it?
video. In this video, we're going to be walking you guys
Yep.
through the
Yeah.
Can you hear it?
average
Yes.
divergence indicator, or commonly known as the MACD, kind of abbreviated MACD. So this is an extremely common indicator used for trading. I myself don't use it all that much for reasons of how I trade.
You can fast forward it about a minute or two.
Is going to be down here, this guy. Now you got
Okay, right there. That's fine.
Okay.
the indicator we're referring to is going to be down here, this guy. Now, you guys have probably seen, some of you guys, if you're older, been a subscriber to the channel for a long time. If you're newer, it doesn't really matter. But a lot of you older traders in here, you guys have probably seen multiple videos on how you use this particular indicator. So if you already know what's going on, how to use it, and you're surpassed this point in your trading, you might as well just get off the video. There's no point in watching it. But if you're newer, this is the video you should be watching. So this down here, this is the indicator we're looking for. Now, chances are you've come across somebody trading on YouTube, somebody's screen showing you something, and at one point you look down and seen this pretty green, red, blue, white line thing down at the bottom of the chart, and you ask yourself, what is that? Maybe that's the tool that I'm missing to make it in trading. Maybe that's what I'm missing. That tool that's on the bottom of everybody's screen, that's what I need to make money trading. That's also false. That's not what you need to make money trading. It's just an indicator. So if you're thinking that route, it's not the right route. But let's get into it. So first things first, you want to go up here to your studies, which is this little beaker. So you click studies, and then you would type in here MACD, and that's going to pull up MACD. You click MACD, hit add selected, and then you hit apply and okay, and there you go. You don't have to go into any of the general settings of the indicator. It's all preset default that it is the way it's supposed to be. So don't change it. It's correct the way it is. All right. Now, of course, if you want to do something to it to try and test something in the future, by all means, go ahead. But generally speaking, it's the way it should be as soon as you click it. So now that you have it set up on your chart, of course, this is what it looks like. Also, let me go back in here. If you wanted to, and you want it to be at the top of your screen, you could also just grab it and you can pull it up here and put it right there. And once you hit apply, it would obviously be up there. So you can actually put it on the chart if you want to. Nobody does that, but if you wanted to, hey, you can. All right, so we're just gonna go back down to here and we're gonna go lower and apply. All right, so now that we have it on the screen, really, it's a very simple indicator. This is not something you want to confuse or anything like that. If you get too in depth with it, it's super simple. So let's make this a little bit bigger so you can see it. Then we'll zoom in here on some of the charts. So ideally, this is the way it's used. This is the moving average convergence divergence indicator right here in the bottom. What this is it's a momentum indicator, momentum, right? So it tracks and tries to project momentum shifts in a stock or in a security or in the overall market. So again, it's a momentum indicator. It's supposed to help you identify the shifting in momentum from up to down. So if you wanted to be long on a stock or short on a stock, this indicator is supposed to help you identify when momentum is shifting in a stock from the upside to the downside. So you can either exit, get in, get out, not lose money, make money. You get the point. So that's what you're using this for, is to help you identify momentum or trend change, shift, change there. All right. So the way we use this is when the blue line here crosses up and over the gray line, it's supposed to classify as bullish. And then when the blue line crosses down below the gray line, it's supposed to signify bearish. All right. So again, look at blue line cross gray line, bull, blue line cross down on gray line, bear. Blue line cross over gray line, bull. Blue line cross over gray line, bull. You get the point. So every time the blue crosses up and over the gray, it's seen as bullish. And every time the blue line crosses down and below the gray, it's seen as bearish. Clearly, not every time that it does that, it's supposed to be seen as bullish or bearish. You still have to look at the stock chart, make some determinations on whether or not that is a good reading, because the MACD here can give you multiple false readings all the time. So let's look at a few. All right, blue line crosses gray line. It's supposed to be bullish. If we go straight up at the chart, look what happened. All right, so blue line, if you took an entry on this indicator solely, when the blue line crossed the gray line, you'd be getting long, like right there. You get this little pop and then boom. And then you would go down here and you'd have this little question mark and you go, well, I thought the blue line crossing the gray line was supposed to signify that it's bullish. And then it didn't work. Trading scam. This is the BS indicator and it doesn't work. No, it's not that the indicator doesn't work. You're just using it at the wrong moment and the wrong time. Okay, this right here, this indicator is not your 100% solve all issues in your life. Okay, you're still going to have to do a lot more research into learning how to trade efficiently. So this blue line crossing over the gray line doesn't always give you the perfect spot, right? So you got this cross right there. You go straight up and look at the stock chart. You get this little pop and then it drops, okay? Now, let's go look at this one right here. All right, so the blue line crossed the gray line, so you get long again. You're gonna be in long right about there, pops up a little bit, rolls over, back down. So then you're gonna go, well then again, this is a bad indicator. It doesn't really work. And not entirely, because if you did get in here at this cross, Netflix did pop up a little bit, so you probably had some room to make a little bit of money, but it's not a big win where you're looking for something like that, okay? So let's come over here to the big rip, right? So blue line crosses gray line. you get long, and then you have this amazing run. Now you ask yourself, well, this cross here is basically the same thing as it crossing there, is basically the same thing as it crossing here. Why are all these crossed? They're all very similar, right? They're all crossing, same type of similarity. Why this one shot so much over this cross, right? And this cross. Why? That's because the moving average crossover, or sorry, the moving average convergence divergence, the MACD does not dictate price movement at all whatsoever. The MACD has zero relationship between what actually happens to a stock and what doesn't, or however you want to put it. And the MACD is an indicator to help you track shifts in momentum. Okay. It's not there to tell you, hey, momentum is shifting for sure 100%. It goes, hey, we think momentum is shifting based on the set of criteria that this tool uses. And now it's up to you to determine whether or not the indicator, or sorry, whether or not the reading or the signal you're getting from the MACD lines up with the stock chart, and that is in fact a good indication you should be buying. So now your next question to Connor goes, well, Connor, now that you said all this, what is the good indication to get long based on one of these crossovers? Well, there's a few things. There's multiple things, all right? So if you're looking at Netflix right here and it's on a clear downtrend and you're getting this quick little crossover, it's safe to say that this probably isn't the best one to trade because it has been downtrending and this is just the first cross, right? So maybe give it a break. It's still downtrending. Right, so now let's look at this one. Right, downtrending. So we're downtrending. We hit the trend, down, right, and then we break over trend with the cross. That is a much better setup to take, considering we had been downtrending for a while, right?
A lot of people don't know this, but the best way to make money with Amazon in 2021 is not by selling.
We just broke trend, and we got a cross. Two signals in one. I mean, I'm not gonna draw it all out, but you get it. That right there is two signals in one. Actually, I got this new nifty little tool that I bought the other day. It's actually a little pad that allows me to write on the screen, since we always have trouble in our private classes. So let me do that. Let's see if this works better. Let's see, where are we at? Oh, you're on that screen? Why are you on that screen? That's weird. I don't know.
This sounds like Joe.
Maybe. Oh, there we go. Whoa, here we go. So yeah,
Right.
we're looking at, it kind of works. Not really, it's still a pain to use, but we'll play with that at some other point. So you get the point. Try to do something cool, failed right in the middle of the video. Fantastic, not editing it out. Anyways, so you see you have the cross over the downtrend here, right? So we had the downtrend and then we broke over that downtrend. So that is already from just price action, simple price action on a chart right there. That cross is already saying that's a shift in momentum. The price action on the chart is telling you shift in momentum because we were downtrending. We broke the downtrend. Okay. You match that up with the cross here on the divergence, right? The MACD. Now you have two signals. Okay. So there would be two signals for a buy. All right. I mean, if we go back further, there could be a fourth signal, right? Let's go look at a 3-year chart here. All right. Oh, we're like right here. We are at, here's another signal that was a buy right there. Boom. Right at a previous support level. So you have a previous support level mixed with the break of the downtrend, mixed with the crossover here on the MACD. Now you have 3 signals as a buy, right? Oh, let me get out of here, go back into the earlier time frame. Let's do.
You see, he's pulling back though. He went to 3 years, not just 1 year.
So now we have, as I said,
you did
3 signals now, right? We had break of the downtrend, moving average crossover, and we had previous supports. Now we have 3 reasons to be buying there. All right. So that's what you're looking for. You're looking for all those things all in one. Your moving average crossover divergence is not going to be your golden indicator that's going to be able to predict every single move for you. You need to be able to go look at the chart, understand what's happening in the chart, and then put that, and then add the MACD to what's going on, and then say, okay, this is the right time to buy, right? All the MACD does is try to help you identify shifts in momentum. And the only way you know a shift in momentum is going to happen is if you can look at the stock chart and say, this thing is sold off too much, we're at a good bounce area, and then you go look at your MACD and go, yep, the MACD is showing that it's starting to shift in momentum a little bit, probably not bad. Also, you want to see something else here? Right? The MACD was downtrending, bounced, the MACD even put in a higher low. So theoretically, on the moving average convergence divergence indicator, it started to uptrend here, right on that low point. Okay, so there's a couple things you could be looking at. Let's go look at something else. We'll go look at Roku. I don't know why. We'll just pick Roku. Sure, why not?
Do one more.
All right, so like here's a good example. Oh, moving average crossover divergence breaks right here, which would put you right there. So you hop in long at the crush. Oh, little nothing, back down, crushed. Oh, well, what doesn't make sense? Why didn't it work? This is a scam. Trading's a scam. You can't win money. It's fake. It doesn't work. Nope, you're just probably doing it wrong. Okay, so you see the crossover here. Oh, that's in line with the downtrend. Okay, I mean, arguably, downtrend broke a little bit. Oh, let me get a straight line. Okay, you can say, okay, well, Connor, right? We had a shift in momentum. The trend broke, right? I see something else. Well, the trend broke, but it's all staying below the 50 moving average, which is that red line. There's another signal not to buy, right? It hasn't broken this 50 moving average. That's another signal. It's saying still don't buy. And again, so that could be one where you play this momentum break with 9 crosses. Okay.
And you can do a put.
Get long,
you can do a put because it's coming down.
And then it
You can't do a call right here. You make money both ways.
It was. All right. So again, this is not a perfect indicator, and I wanted to show you a few examples. All right. So at the end of the day, this is a shift in momentum. That's what it does. It helps you identify shifts in momentum. Oh, look at this. Here's another signal. So we get a nice crossover here. Okay. We get a crossover. The moving average, the indicator just double bottomed. So the indicator itself double bottoms, and then we get the cross, right? And if you go straight up.
What's up, guys? Robbie here. If you want to learn how to make $1,000 a day,
okay, straight up at, let's have the cross maybe a little bit, arguably a little bit over, maybe a little bit more. So we're starting to get this cross right here at 2630. Let's zoom out on the chart. Let's see if 2630 is anything significant. Is this a big enough chart? We'll see. Kind of. We'll do a 3-year chart. Okay, so we come to find, oh, would you look at that? The $27 mark on Roku is basically the IPO pricing of the first candle, right? This big green candle. This is the first day of Roku becoming a publicly traded company on the stock market. And you come to find that the first candle on the day that they opened in the stock market comes to be exactly where it bounced. Opening IPO price, not opening, but high of that day, right there. Look at the volume coming in here as well. Massive volume, and we get the cross. So you have massive buying volume right on a great support system at a low. And then you go and look at it. That's probably the one to buy for that crossover, that shifted momentum. Okay. So as you can see, the moving average.
You want me to stop?
Yeah, that's fine. I'll take it back over.
Okay.
So you guys get it. That's a great indicator. And again, it's not the end all be all. It's just basically another indicator to give you peace of mind. And I'm gonna keep it simple, guy. I don't think I want to put anything else on my chart. I mean, that's 3 indicators. The SMA, I got the MACD and the RSI. But they do give me confirmation, and I'm using them just like that guy right there is talking about using them. It's going to take a little practice because you may see a signal and you say, man, this is like a good signal. But then all of a sudden you say, oh, it's trending down. Maybe I don't want to get here. So let me see. Back to share. Can y'all hear me okay? Am I back or am I still?
Yeah, you're back.
Yeah.
Normally.
Joe, can I ask a question? What was the significance? What was the significance of that 2630 from the IPO, the high of the IPO day?
That's where that was the high of the initial public offering.
So
that's where it found support. It found support 3 years later, and it took off.
Okay, so
I mean,
so
that was a good entry.
So it breaking that point was just an indicator of momentum.
Correct.
Okay.
And because it had been downtrending, and until then, and he noticed he called it a double bottom on the MACD. And then the green crossed over. He circled the green crossing over. So, I mean, I just want to introduce that to you guys. Now, conversely, Think about it. Those examples, he was showing you trending down. That's like Ford right here. Ford right here is trending down. Each one of those pips, those red pips, is a red day of trading. I did 6 put contracts. So that guy was talking about basically, let's say a call. I'm not going to get in on a call right now because I would be betting that the stock is going to go up and it wouldn't be a good time to get in on a call. But conversely, it would have been a great time to get in on a put like I did right here. I'm reading this and the MACD, you see the green line is crossed over right there. Let me get my pen back out. So we make money doing both. You see this right here? That's telling you it's on a downward slope. I'm not super concerned with, and then look right here. Look where the volume turned. The volume turned red right there. Right there. Now I don't know how much red volume it's going to be, but I don't have to know that because I'm looking up here and I trust what I see these last 5 days. And even if we do have a green day, even if we do have a green day, come on. It gets snuffed out by one, by more red days. Now, in this put that I bought today, let's go see it right here. This put that I bought, you can see is 6 contracts, and all I need the price action to do is come down to what's the break even? You see the BE at the very end?
1450.
Right? So let me show you how these come in. How do these come in? This is a service that I have, and it's on the Balling on Wall Street. All right, this is once you become a part of this service. Again, I use this service because I don't have time to sit up and do all the analytics. I love trading options, but she has like some what's the word, algorithms, or she got some, who knows, software, and she can crank these out and find, unusual option activity and read it somehow. And then she puts this service together. It's called Ball on Wall Street. This is Instagram, and this is a private Instagram. You have to be a part of this service to be able to get in here. So this is the one she sent out today. And this is how they come out. If you read it right here, let me get a pen. She's saying right here, buy. Here's the expiration, July 2nd, put. It's just that simple. She say, use this strike point. And then she say, here's the break even or where you want to get out. Again, buy the July 2nd, put. This is a Robinhood. She's on Robinhood. This is how they come across. She say, do the 15 strike and set your break even at 1450. This is where you want to exit. It's just that simple. Okay. So what did I do? That's what I did. I bought 6 of them because they were cheap. And that's the one we've been going over. Let's look at some more. This is how they come out. Okay. Here we go. Presley.
No, don't.
Here we go.
I was waiting for you to do that.
I told you, I've been watching this, and when you called me, I was like, oh, I think you was on the wrong side of that thing.
I was on the wrong side.
She said, she sent this out, what day was that? 5 days ago. See down here?
Uh-huh.
She said, by the June 18th. That's coming up this Friday.
Uh-huh.
She said, to make it a put. She said, do the 13.5 put strike and it's gonna get out because it's gonna drop down to 11.85 before this date. We never let them go to the expiration. This is unlike the naked puts and calls that we've been teaching y'all for the first 4 months. You never let it go to expiration. You either roll out of it and roll it to the next week because you need a little more time, or you take that L. You lose.
I lost.
Like the only reason you will go to the expiration is because you holding on and you don't want to roll it because you just don't want to invest no more money in it, because to roll it, you got to put more money in than you already got. Sometimes you roll, other times, like y'all see, I've taken an L. But here's the thing. Let me show y'all this, because y'all family, and it is what it is. This is June. This is where I started June. And just already in June, I ain't even did the math, but I've been on some of these plays, and profit, you see profit 448, you see 448. So we still got 2 more weeks of trading. And these ain't even came in yet. The ones that ain't crossed out, they haven't come in yet. They will. Clover's gonna hit.
Yes.
Riot is gonna hit. That Riot hit. I fat fingered that first Riot that you see crossed out right there. I bought a call when she said do a put. Oh. So you see me get in it. You see me get in it, and then right here, you see me. No, you know what I did? I sold out of it. I sold out of these. And you see the profit there. Okay, that's the one I meant to get out of that. Okay. No, I didn't. I sold out of it. I set my sell limit the wrong way, and it kicked me out early. And it was still early, but I'd already made $200. So I jumped right back in it. I jumped right back in Marathon and the Riot. And that's where I'm sitting right now. But you see, I got to July 7th on both of these, and they're going to hit. Now, what I want to show you is how these act, and y'all already know from being in the naked puts for 4 or 5 months. You already know how these act. So let's go to Clove. Go to Clove. So here's the deal with Clove. Now check this out. I still got this. I still got the year. I'm up in the Goodyear blimp. I got a year and a day. This is what you call a day chart. Okay. So you see what Clove has done. One day of, here's one day of green, a negative day, big old negative day. Another pretty big negative day, very small, almost consolidated sideways, but they gave him a green. This one dang near didn't even register. And then we gonna have 2 more red days. So this thing is trending down.
Yes.
It's trending down. And let me show you all by going to my positions. This is how these move. Now, I do go to a 5-day, 5-minute chart. Here's a 5-day. Here's a 5-day, 5-minute chart. Okay, 5 days. And you guys see, you get all this activity. And ultimately you see, yeah, it was a down day. This is what shows up on that year chart. And it's a down day ultimately. But yeah, you can get in here and track, more movement. But how do you read these? Let me go to positions. And you guys come down here, you see, oh, let me get that out of the way. So you can see right now, Clove. ITM is in the money, which is a good thing. When you buying and buying puts when you buying calls. Anything with the ITM signal it moved. Now, Clove didn't say ITM a day ago.
Hit the down arrow, Gerald. Hit the down arrow.
What's the down? Why you say down?
You're here, right here.
Huh?
You know the arrow right next to it, and break it down.
Oh, I am.
Okay.
I am. But let me go sideways first. So here we are. You see my up top again. Well, we can do it this way. I'll just open it up. So right now you can see my profits. My profits today was $150 because it's going the correct way. Remember when we started this, I said you don't have to wait to get to your break even before you make money. All it has to do is move in the direction that you needed to move. Now, I bought a put. Remember, let's go take a look at it. Where's the Clove at? Here it is right here in the middle of the screen. I bought 5 contracts of a Clove put. The P stands for put. I got to this Friday, 6/18. She said to get out at 11.85. Let's go back to the chart.
Let's see what it is at now. 11.85.
It said 12.95, and I've already made $150. Now, I'm the CEO of my portfolio. I can get out right now.
So,
now here's the P&L pieces. Go ahead.
I'm sorry, you introduced this last week, right?
Yeah, but I went over every single thing and more that I've said from last week.
Right. I was sick. But how do you get out? Just tell me how you would get out of this. If you want to take your $150 here and get out, how would you get out?
See this square right here? Anytime you want to get out, guys, come to your positions, touch it and open it up. And then you put the check mark in this square right here.
Okay.
And then it says close the selected. Basically, it's saying close the selected position. I touch it. And then it already populated the number of contracts that I had. I got 5. I got 5 closed. And if I get out right now, this cost of trade is my premium because I had to buy to get in. And then I'm selling. This is the only time you hear us say the word sell when we buying puts and calls. I want to sell to get out of here. Now, if I didn't want to take all my profits, and I'm not profiting yet, I can change and say leave. I can, instead of 5, I can say just give me 2 of my contracts back. I think it's gonna still make money.
Okay.
But I can change the 5 to 3, or I can take all of my profits. That's how many contracts I got.
Okay.
And it automatically populates the maximum contracts that you have in that ticker. Okay. And then everything, Bernice, is the same right here. But that's how you go to your positions.
Okay.
Look at the top left. Okay.
Right.
You go to your positions. Let me back up one more time. And Clove.
You recorded last week, didn't you?
No.
Oh shit.
I'm recording this week.
We didn't go over last week.
I'm recording this week.
The positions last week.
Again, I'm doing way more than we even did last week. Is that correct, guys?
Yes. We didn't get into this at all. Not this.
No, we didn't. I knew I was going to record it, and I was hoping that more people would be on today.
Okay.
And y'all came through. Okay, so now let's look at how this works. Like right now on the day, since it was falling and it was a red day, and I bought a put, which means I'm betting for it to come down. I made $150 on the day. The P&L open this is what I'm down since I opened this up 5 days ago. So I'm still down $265 with this. The P&L percent, it's still negative 34%. My cost, this is what I spent. I spent $1,537 to get in. My net liquid is 500. If I say, forget it, man, I just want to get out, then I'm leaving some money on the table. Okay. And then of course you get your delta and all that. But that's pretty much how you read these. We can go take a look at another one. And in the positions, another one that I have, let's look at Riot. I bought Riot and MARA, which is Marathon. Let's look at Riot.
Oh.
Riot, you can see I did 3 contracts. Let me just get this so y'all can follow along. I did three contracts for July 2nd, 2021. Wait a minute. Let me open it up. No, it's better if I do it the other way. Okay. So this is, what's my expiration on this?
July 2nd for 37, right?
Yeah, okay, July 2nd. Okay. When she sent these out, her name is Fee, the service I use. When Fee sent these out, she wanted to give us a little more expiration time. Sometimes she do them in the same week with expirations, and sometimes she opens it up. Now, it is less risky if you give yourself some time for it to come down and hit your break even. They're more expensive because think about it, you're buying time. So you're saying, okay, well, that theta is not going to beat you up, and you're not on edge saying, come on, we only got 2 days left kind of thing. So when you give yourself time, when you buying these options and calls, they may be a little more expensive. Okay, so here we are with Riot. And I'm not concerned with this because, again, I went up in the Goodyear blimp, and this is a call, and you can see on today, and you guys know how stocks move. A lot of times the day traders come in, the day traders pump it up, and then they take their profits, and you'll see the stock go down. And that's what's happening here. You'll see my P&L today, we lost $189. Since this thing opened up, I lost $120. Okay. Here was my cost to get in it, $2,400 because I did 3 contracts, $2,477. And if I got out of this right now, it's $621 that I'll just get back. But think about it now. I've got time, right? Let's go look at, you see at the bottom, I don't know if you guys know how to navigate this. The very bottom, show Riot details.
Yeah.
We touch this and we get right to the map. So let's go back to, we can see all this action during the day, the price action during today. Now remember, this is a call. So I'm anticipating by July 2nd, I need this to start moving up. Any action up. And look at this right here. Out of the last 5 days, you know why I'm not super concerned? Because out of the last 5 days, you see the 5-day chart that I have here, I'll open it up to that day chart. But in the last 5 days, look at this 38.08. So I know that it's going to come, probably tomorrow, it's going to definitely get back up there to that 38. Because that happened, that was today at around 11:40 today, we hit a 5-day high. So what happened, guys, was people had pumped this up all this morning, and then they took some profits, and guess what happened to the stock? It went down. And this is why I'm saying, when you're looking at these 5 days and look at this, 5 minutes, every 5 minutes, we getting a pip. It's going to be a red pip or a green pip. So this could be emotional to stare at this, and I'm cool looking. I'm cool looking at it because I know what's happening, but I don't want y'all to get super concerned when you see the stock going the wrong way, because it's just not you in here trading. You know what I'm saying? It's this many people that's got stuff going on. Look at the volume. Okay. So you come up here to Riot and you see it's a lot of volume in here. Okay, but let's pull back. Let's take a look from the Goodyear blimp. Why am I so bullish? And I got to July 2nd. Because based on what y'all just learned, take a look.
Stover going up.
Which way is this trending?
Trending up.
It's trending up. You think I'm concerned? By July 2nd, we Gucci.
Yeah.
Before July 2nd. And I showed you all, and again, this is just as you just take your time. When in doubt, zoom out. Go ahead and look at it from the Goodyear blimp. And then take in consideration not only the MACD that we learned today, but your RSI as well. Now remember, things don't change as fast as they do on a 5-minute chart or a 20-minute chart. When you got this RSI trending up like that, you got your signal right here that we just learned about. And then you all saw that the SMA trending up. What do I have here? I have 3 signals, 3 confirmations. You think I'm concerned about what I saw on that 5-minute chart? Nah. And you know what? The other one that I did as well. Marathon. My positions. Let's look at a marathon chart. Here's Marathon, M-A-R-A. All right. On today we lost money, no big deal. The P&L open, I'm still up $33 though since it opened up. So Marathon is the one that's going on the Russell 2K. It's coming up. So Riot is riding off of that sentiment. Okay. And here we are. If I net liquid, 642. But I paid more than that. And I got, how many contracts did I get? I got 3. I got 3 of these. But let's pull back. Let's look at Marathon. 1-day chart. Look at that. Let me move this out the way. So now, what am I seeing right here? I'm seeing it's coming up here and it's bouncing off of this. I got a 50-day SMA. Remember that averages all 50 days at the end of trading, like we went over already. So the price action is bouncing off of that, and it's going to break through because it's trending up. You see, it's trending up. Then let's take a look down here. Again, all these are just signals, just confirmation. Then we got the crossover. We got positive volume here. It's all happening right here. If I can go up there, you'd see that's where it begins to trend. And again, we got a pretty good strong signal up. And we got a lot of room here before it becomes, right here, remember, it becomes overbought and eventually it comes back down. So we still got room before it to climb. And all I need for MARA is I need a break even of 34.65. That's all. I'll just touch it, and it's gonna stop me out of the trade. I only have to be on.
And how did you set your sell limit?
We'll go over that next week.
Okay, okay.
I just wanted to I wanted to let y'all see, and let's go ahead. So in the month of May, I watched her for 1 month. And there's services out here that do this. You can kind of see as I scroll through. Lost 85, we bought, we profit, here's some profit, there's some profit throughout. This is all May. This is just buying calls and buying puts. Okay? There's skin in the game. I call it, those are the lost. Now that Amazon right there, lost 13. Yeah, she sent that out. And I wasn't doing technical analysis like I'm doing it now. But you know, there's just skin in the game, man. You know, you have to play. And I think I did like 33 something. And you can see down here, my May profit was 44. It was actually before I took it out. I mean, if I'd have batted 1,000, it was like 7,000. It was like 69.99. But I mean, you know, that was just my first month doing this.
And Gerald, you can also say that you know, once you got comfortable with this, you wasn't doing any type of panic selling.
Absolutely.
Panic selling is man, that's the worst thing you can do.
And that's one of the reasons why I told you guys, when in doubt, zoom out. Get up in that Goodyear blimp, find you a day chart. You need to see a trend, because that's not a trend when you're watching the daily price action. You know what I'm saying? It's every 5 minutes a pip. Or if you're on a 1 minute chart like a day trader, that's not price. I mean, that's price action. That's not trending. You want to find a trend. What is this stock really doing? You got to pull back. Does that make sense? Questions, and then we're going to put a pin in it.
I'm looking at so I downloaded the app, and the reason remember I kept saying my Thinkorswim looks nothing like yours is because I was still on the web. I didn't realize that I wasn't using my app. So I updated the app. It was downloaded, just wasn't updated. And
what
now
web? What was you on Trade.Thinkorswim? Because I was on that today.
I don't know. Because I saved it. So whatever it goes to whatever I named it at the time. And I still have access to it, but it looked completely different. But I'm trying to, so now I'm over here on the app setting up my charts. And for my the daily SMA for my studies on my price chart, I'm only getting one line. I don't have like the 50 and the 200, and I don't remember how I did that on the other one.
Okay, well, that's going to be in your settings. That's very, very basic. You just do a you need to take the tutorial of y'all should have all done that by now, because you want to be able to navigate and then customize, you know, your platform. You on that platform every day. Make it look the way you.
Yeah, because I was using the other one and they are absolutely nothing alike.
Completely different. Yeah, I need to do the tutorial.
So I'll do this because I think I looked at it and I was like, well, this isn't what I have.
Yeah, I think you was on something like .com or something.
Yeah, it was so different.
Right.
So,
this is
okay, so I'll do the tutorial and see if I can
yeah, I'll do it too.
Because now that you say that, I remember that's why it looks so different.
Presley.
Right.
When I was asked, this is Bernice, I was asking Chuck, did he recorded last week's class? And what was it you were saying?
I was saying that we didn't go over what you were asking. He literally, like what he went over today was a whole lot more. So we didn't go over getting out, because I had to call him this morning to get out of I was on the wrong side.
So last week you went over how to get in.
Right.
Okay, so now if I want to go on YouTube, what would I look up to see something to find out about this?
Oh.
Well, we have a YouTube channel We have
Yeah,
a YouTube.
I know you do, but you don't have this particular information on YouTube, right?
Yeah,
Will be.
we have a YouTube channel. I taped this tonight, and this is going to be on our YouTube channel.
Right, but I want last week's too.
Okay,
Bernice.
there's no need to get last week's, Bernice,
Okay,
because I did not record it. I forgot to turn it on, and the stuff that we went over last week, it was nowhere near what we did today, and that was by design. After I realized that I didn't turn on the record last week, it was by design that I came back in here this week and was much more thorough.
Yes.
And he went over how to get in it, so you can go back and watch it from the beginning.
Correct.
Yeah, and I was in there last week, Bernice, and I'm telling you, like what we went over tonight was way more in depth. He just touched on it last week and gave us the outline last week, but he shaded it in tonight. So it was,
Yeah, I like that. I like that.
Mhm.
okay.
So real quick before we get off, this is the like I said, when the service that I'm using, and this is the patron. You know, it's a social media kind of a deal for participants.
What's
And
it
these
called? Bulls on Wall Street?
Well, Ball on Wall Street is the Instagram, but it's private. Until you do your subscription, she won't let you in that Ball on Wall Street Instagram.
Okay.
She won't let you in, but you have to go to Patreon. You download Patreon in your Google Play Store, or you can go on patreon.com on the web browser. And this is again for participants. And this is how she communicates with us. Like I said, she'll send out this one. This is one that that came in Friday at 9:45. President, you see this here. She said it's the short attack. She said it's a short attack on Clove, and she sent out. You guys see the directions there. You have to send it to your gallery. It's very, very small. And I always touch it and send it to my gallery to look at it. But here are the comments. You can kind of see how people, when it wasn't dropping for a while, you know, a lot of people have that FOMO and they panic selling, like Chucky was saying. FOMO is fear of missing out. FOMO is a term you hear a lot. So people are like, well, this is me. See me commenting 7 hours ago. Good movement on Clove today. People are just, they in here just, you know, back up in here Friday, they're like, man, this thing ain't moving and I'm losing money. And so you all understand how stocks move and people pump it up to dump it. And as long as you check your technicals, which is kind of a shallow thing that we went over today, you'll have a lot more confidence in, you know, your positions that you get in. And that's all that we're trying to teach you all. So like Chuck said, you won't be panic selling, looking at them little 5-minute charts and be like, oh Lord, man, I'm in the red today. I'm so much and I'm down $300. You know, you don't have no confidence because you really didn't get more than one signal. And the ideal is to get more than one signal. That's why I added that MACD. That's why I keep the RSI. And that's why I'm digging a little bit deeper, trying to read the SMA and all of that. And I hope y'all understood that a little bit. And if you got questions, we can go over it again a little bit with different stocks and back test this. Go pull up Facebook or Twitter or another stock and look to see if it's consistent, because all of that data, we got so much data to test it against. You know what I'm saying? Just go back a week and be like, okay, let me see, man. This thing went up. Let me look at the MACD right here. This is where it took off. Yep, that's consistent. And then you begin to build confidence, and it helps you with your placements and your positions.
Gerald, you said to get Ball on Wall Street, you have to go through what? Pave? What did you say?
It's
Spell it.
It's this right. you're looking at it.
Patreon.
R-
Patreon.
Oh, Patron.
Reon. It should be, I think it's Patreon.
Okay.
Patreon.
And
Patreon.
so you go there and purchase this. And then that allows you to get into Ball on Wall Street.
Okay, yeah,
dark room.
but Bernice, let me advise you this. This is it right here. That's it, Patreon.
Okay.
Okay, and it's just it's a social media platform, and once you download that, then there's a space that you type in, and you're gonna type in the creator because you're looking for. There's a lot of creators on there that have different things that don't interest us. You're gonna type. You're looking for the dark room.
Okay.
Okay, and here it is right here.
Okay.
You see, this is us. This is us on Patreon.
Okay.
The dark. This is the service, and she offers. You know, yeah. So once you download Patreon, you type in there and populate the dark room.
Okay.
And this is her name is Fee, and you know when fee like pay a fee, FE.
Oh. Okay.
Oh, you're gonna tell her like you told us, Gerald, to wait till the beginning of the month?
Yeah, I was just gonna say, you know, it's $125, and no matter when you come in, you have to pay $125 at the first of the month. I would say hang off. I would say hold off. And the plays that I send to the WhatsApp, practice those plays. Practice your entry points.
Okay.
On paper money, and then you just build up some confidence. You don't want to jump right in this until you kind of play with it and navigate a little bit.
Right.
And then maybe the first of the month, you know, if you're feeling, you know, a little bit more confident, you know, $125 you can make up really, really quick.
Okay. Well, now, what's the overall name for this? Because I missed all of that.
Calls and puts.
We're just buying calls and we're buying puts.
Okay, you're buying calls and buying puts. Okay.
Yep, that's all we're doing, guys.
Okay.
And again, this is something separate from what we've been teaching you for the first 5 months. And from all we've been doing is naked puts.
Okay.
Don't forget that. Don't get rusty with that. Y'all got that now, right? This is just another way to make money.
Right. And this is just buying calls and puts.
That's it. Buying calls and buying puts. If you're buying a put, you saying, I believe that the price is going to come down.
Okay. Right.
If you're buying a put, we are believing that the price is going to go. Did I say call? If we're buying a call, we are believing that the price is going to go up.
Okay.
So where did you say you put that information at in the WhatsApp?
I will when she sends these out, like you saw. Am I still sharing?
Yeah. No.
I'm not. Hold on. Yeah. Okay. Here we go.
Go look at my drawer. Bring my wallet for me. I have my car keys.
This is what I will be putting in the WhatsApp.
Look up there right quick.
Okay. When they come into me and I do real money. When I do real money, I'll be putting these in the WhatsApp for y'all.
I'm sorry.
Okay.
And again, all this is saying is she's saying right here, buy. She said on this one, it was today. So this one was expiring the same day. So you put in this expiration, today's expiration, whatever day that was. And she was saying, do a call for the same day. This is 0 days to expiration. I passed this one up. I ain't do this. This was Fisker, or I think FSR Fisker. She was saying do the 19 call and then get out at 1912.
Oh.
Didn't have to move that much. Again, just needs to move a little bit and you make money.
How much would you have made?
I don't know. I had to pull up the option chain and depends on how many contracts you get, et cetera. But you'll know all that before you go through your 2 processing screens.
Okay.
You know, none of that changes. So that's why we're gonna have y'all practice these with paper money when I send them. So keep your eyes, if you don't have your alerts on, turn on your alerts for WhatsApp, because when I get them, I'll send them over there, you know, here and there so y'all can practice them.
We set those up last night without paper money. So we did.
Good. I sent some over there yesterday. And what are those expired? July 2nd, I think.
July 2nd. July 2nd.
Right.
Yeah.
Okay, cool. So you can watch those, go in your positions. You see what your P&L is doing on the day. You see what your P&L since you opened it is doing. You're seeing what your cost was. You're seeing what your net was. Is. All right.
Yep.
Okay, guys.
Okay.
Always will. All right. Enjoy. Have a good one.
All right, y'all.
Bye-bye.
Bye-bye.